There is one bookkeeping mistake that I see almost everyone making, and the problem is it's costing them thousands come tax time. So I'm gonna go over that at the end, but first let's go over the 5 mistakes that I see, the top mistakes that I see almost every investor making. The first one is simple and it should be understood by everybody, but I still see people making this mistake, is mixing personal and business finances. Now, quick and easy fix is open up a business bank account and only use that bank account for all your expenses. But especially at the beginning, whenever you're first getting started, a lot of the startup costs are coming out of personal accounts, and we need to make sure that we're not doing that anymore. This is one thing that your startup costs are going to be quite a bit for a lot of companies, and if you're using your personal bank account, then it's going to be more difficult, not impossible, but more difficult to claim those as write-offs. So put them on or before you start purchasing your startup costs, open up a business bank account, get an EIN, do all that stuff, LLC, EIN, all that stuff. Then open up a personal bank account, dang it, a business bank account, and then do all your expenses out of there. And then from then on, you should be good to go. Don't mix it up. Don't use that business for your personal or nothing like that. This is the easiest one to fix, but yet the hardest one for a lot of people. Now, for mistake number 2, we got missing receipts. This is one that is a hard one for a lot of people, especially one if you're, doing a fix and flip, or if you're building a building from the ground up. You're going to Lowe's constantly and you're buying all these little things. Sometimes you go to Lowe's 4 or 5 times a day if it's not a good day, but you have to keep those receipts. The best thing you can do is take a picture. QuickBooks does have a feature where you can take a picture of a receipt and it will pretty much auto upload most of the information, not all of it, but most of it. But at the very least, you can take a picture of it and put it in a file in your computer, and best practice is to put it with the property that you're buying it for. That way you can split up each property's expenses. That would be the best thing you can do. But at the very least, just take a picture of them, put them in a file. Don't have a shoebox. That's an accountant's worst nightmare, is to get handed a shoebox. So save your receipts. Put them digitally. Number 3 is misclassifying expenses. Now, excuse me. Now, I see this all the time. The number one thing I see is people pulling out money for their personal use. They're drawing money out, putting it in their personal bank account. Now, on QuickBooks and from your bank, it just looks like, an expense. There's money coming out, and so especially if you're not keeping up with your transactions, you'll just classify that as, boom, there's an expense right there. Not quite, man, not quite. The problem is that's an equity play. That's gonna be coming out of your equity in the business. What the business owes you is where that's gonna be coming out of. So your equity in the business is going to be lowering. So instead of putting it as an expense where it's going on the profit and loss and can be wrote off, it's going to go on the balance sheet where it's an owner's draw or owner's pay, or however you want to say it. Depending on the structure of the business will change. It could be partner's draws or whatever, however you want to say it. But you're pulling it out. It's all equity is what it is. You're pulling it out of the business and putting it into your personal account. So you cannot write that off. And I see this a lot whenever I start a cleanup or something, that they've been classifying their owner's pay for a long time, and instead of fixing that or looking into it a little bit deeper, they just classify it as an expense, and their expenses are a lot higher than they should be. And you would think, oh, that's a good thing when your expenses are lowering. Well, not come tax time. you're not going to be able to offset your income as much. You're going to be like needing to owe a lot more in taxes sometime. So sometimes bookkeeping doesn't always save you money. Sometimes bookkeeping will show you the reality that, oh, you actually owe a lot more than you're expecting. Well, moving on, number 4, mistake number 4, not reconciling your accounts. So if you don't know what reconciling is, it's pretty much just taking your bank statement and comparing it to what you have in your accounting software for QuickBooks. And so you're gonna categorize every transaction, and then it's gonna go over, in QuickBooks at least, it's gonna go over to your chart of accounts, and you'll be able to look at it on the general ledger and everything. You'll be able to look at it, and you'll be able to see, like I would go month by month, just because that's your statement most likely. For the bank account, you'll go month by month looking at the bank statement and comparing it to what's in QuickBooks, and you'll just see if it lines up. And then when you reconcile, you're gonna be able to check off some or take off some that isn't there. But most of the time, unless you've added transactions, you're gonna just check off everything, make sure everything lines up, and then your reconciling is going to go to a 0, and then you know that you're on point. You have pretty much checked your work, and then you're good to go. And you're going to do that each month. And this is important because you don't want to come to the end of the year and then all your numbers are way off, and you're like, where did that happen? It's not like you can find it very easily, especially whenever you're getting your charges up there into the hundreds or 200 a month. Then you're really going to be like really struggling to find where that is, and you're going to have to go month by month to find it anyways. So you might as well just reconcile every month, make sure you're good, and you can move on. And mistake number 5, what I mentioned earlier, the number 1 mistake that I see pretty much everyone making, especially at the beginning of a business's life, is not hiring a bookkeeper whenever they need it. I understand at the beginning of the business, you're keeping expenses low, you're going to do it yourself, and your transactions are pretty low, so it's probably fine to do it yourself. But eventually there comes a time where your business starts outgrowing what you can handle. And it's not that you can't handle it, you can learn it, it's not hard, but it's time consuming. And the point of growing a business is to grow the business, not learn the numbers and grow the numbers, get better at doing the numbers. You want to grow the numbers, obviously, but you want to hire that out so you can get better at the craft of, the business. If it's buying properties, if it's flipping properties, get better at that. Don't get better at the bookkeeping process. Leave that to someone like me who's a professional at it. You can hire me, link in the description below, and I'll be able to take that off your plate, and we won't have to worry about anything. So, let's recap. Number 1, don't mix your personal business expenses. Number 2, keep your receipts. Number 3, classify your expenses correctly. Number 4, reconcile your accounts. And number 5, let me know if you need help. I got you.